We want to bring in our next guest, and that is Omair Sharif, Inflation Insights President. And Omair, it's great to talk to you. So when you see the slightly hotter than expected inflation print, that was the case on the headline number, that was the case on the core number here. Does this at all change your calculus or the Fed's calculus for their path forward?
I don't think so. I think the number was a little bit hotter than expected, as you said. I would really zero in on the encouraging news today, which is that the one piece that we've been sort of, the last shoe to drop we've really been waiting for was housing inflation. The last couple of months, it was really elevated, even though I think we had been seeing a lot of relief in the first half of the year. Today, it did finally cool down a bit more. So, we ended up 0.3 on both rent and what's called owner's equivalent rent. Together, that's 40% of the core CPI basket. And it moderated from around, OER was 0.5 last month, back down to 0.3 today. And Chair Powell said, look, I've been waiting for this. I thought it would happen more quickly. It's taking a while. But he did note that, core goods have slowed down. Core services outside of housing have slowed down. And really, they were waiting for housing to slow. And so that happened today. I think that's the encouraging takeaway. And admittedly, some things were hotter than expected today. But I think some of that stuff is more likely than not to be, a one-off in this particular month.
I mean, some of the things that were hotter than expected were areas where consumers will see it on a cyclical week in, week out basis. And I'm thinking of, and hearkening back to our conversation that we just had with one CEO of a restaurant group here, and he was pointing to these 5 of 6 major grocery store food group indexes increasing over the month. Meats, poultry, fish, eggs rising 0.8% in September as the index for eggs actually increased 8.4%. All these things considered, that seems to be one of the areas that might be most pressing for consumers, where we hear them pushing back on some of the discretionary purchases in order to just make sure that they can meet the regular spends that they need to also have on a week in, week out basis.
Yeah, look, I think that's a very fair point. As you said, that's just, that's something people go shopping every week for groceries. You're going to see those price increases. A couple of things I would just say about that, though. One is that egg prices have been obviously extremely volatile because of the ongoing impact of the avian flu. So that's continuing to affect what's happening with eggs on a, pretty regular monthly basis. And because those swings are so large, I mean, quite frankly, 8.4% is a smaller number than we've seen in recent months for egg prices, moving up and down. That's impacting the overall food basket. But I would say, if you look at food prices over the course, especially grocery store prices in particular over the last year, we're running around 1.5% year over year growth. So obviously, since COVID hit, that level that you're paying is much higher than it was previously. However, over the last year, that growth has really kind of flattened out for grocery store prices. You're seeing more and more sales now at grocery stores than you did even last year. So yes, you're going to see some of that. Yes, consumers will notice when it ticks up. But I think over the course of the last year, grocery store prices have essentially really, mostly flattened out. And I will say the USDA expects them for the balance of this year to run only at about 1%.
Omair, when you take a look at the fact that energy costs, at least for last month, declined 1.9%, there's been so much focus on the rise that we've seen in crude costs over the last couple of weeks, maybe ultimately how that could play into upcoming inflation prints. Are you at all worried about that? And I guess, how should investors then be thinking about the impact that this could have on future prints?
Yeah, I'll say what I normally say about this, which is with geopolitical risks, the impact from the hurricane is likely to impact prices in Florida. This tends to ebb and flow. And so, yes, we're likely to see some increases. We've seen them in retail the last several days because of what you just mentioned, which is crude oil shifting higher. But prior to that, we had seen really, really good deceleration in retail. The national average is down around to about 320 or so. And so we are seeing good relief. If this continues, obviously, I'm not going to sit here and predict what's going to happen with geopolitics. But if that continues to push crude upwards, that's going to be a worry. I don't think we're at the point yet where the Fed is really going to be overly concerned about what's happening with crude. I think, again, they're really focused on, what's going on with core inflation. Food prices went up so much right after COVID. They've come down quite appreciably, or at least flattened out quite appreciably in the last year. Energy generally had been coming off up until very recently. So I still think overall those are positive signs. Housing coming down would really just be a huge help overall for the Fed. But I think given that hot print today, even though I do think some of this stuff will reverse course pretty quickly, I think that's, if you were thinking 50 bips, that's pretty much been wiped out at this stage. I think most likely, don't forget 2 weeks ago, we were we were talking about pricing in almost 50% odds for a 50 basis point cut. And now, as Jennifer just mentioned, about 14% odds of no cut at all in November. But I think the Fed still wants to progress slowly here. So I think 25 is the base case for November.